Oh my goodness, it's always good to have a little comedy on a Saturday night, and that is what we have here today, guys. I'm going to share some moves that a hedge fund manager has decided to make out there in regards to some stocks over the past couple months. These are some very, very interesting moves. We're going to dissect these and we're going to get his opinion on these moves, guys. Hope you enjoy this. Hit a thumbs up if you do, all right? Hedge fund activist Daniel Loeb is worried about this. Market cuts Netflix and exits Facebook, okay? Let's look at this here. Dan Loeb blamed his pessimistic market outlook on his expectations for a slowdown in U.S. economic activity for the next 12 months. Third Point exited its stake for Facebook and cut its position in Netflix according to a filing with the SEC, all right? Third Point's Dan Loeb is concerned with the current market conditions and told investors in a letter that he has significantly cut the firm's position in technology stocks. The hedge fund has fully dissolved of its stake in social media giant Facebook and cut its position in Netflix by more than 33%, according to a filing to the SEC. All right, this was just very recent. This came out, all right? The firm, however, has upped its position in Microsoft to 4.1 million shares now, okay? First off, let's just talk about this Facebook and this Netflix side, and then we'll go from there, okay? Netflix has gone down significantly over the past, let's say, 9 months or so. Basically, since around the time I put out the video about, maybe we should short Amazon and Netflix. At that time, Netflix shares were around $420 a share, and since that time, it's gone down a lot. Now, this gentleman, since he sold out over the past few months, has sold out probably near the lows that Netflix has hit, okay? So he's probably sold out at some of the cheapest prices Netflix has been at, all right? Same thing with Facebook shares. If he's been selling out of Facebook shares the last few months, he's been selling out anywhere between about $145 and probably $160, all right? Now, why didn't he sell out? He had a perfect opportunity to sell out of Facebook a long while back, right? When everything came out with Cambridge Analytica, the stock was at a much higher level than now. We knew about all that risk. He could have sold out near $200. Why didn't he sell out there? That's a big question, first off, okay? So here's some more things, all right? While current U.S. growth remains above trend, helped by fiscal stimulus, this positive impulse is peaking now and will combine with an increasing drag from tightening financial conditions, Loeb said in the letter dated Friday. We have delivered our portfolio, reduced our tech exposure meaningfully, and grown our short book. We expect to be net sellers over the next few months if the markets rally. So let's go over this statement and then we'll get to the rest of this, okay? He believes that right now U.S. growth remains above trend, but he says obviously, we're at the peak right now and, things are going to get worse. We're at the positive impulse is peaking now, he says, okay? First off, I'm not sure we're at a stake where he's almost making it sound like everybody is so bullish right now, is so happy with where the market's going. And when I look at it right now, I see a lot of bears out there. I see a lot of people who are like, I'm a little scared. Maybe I shouldn't purchase this. I hear from friends and family members, maybe you should wait on buying a house till next year or the year after. Maybe the market's going to crash. Is the stock market going to crash? Real estate's going to crash. I hear a lot of worries out there. I hear a lot of scared people. I wouldn't say we're at a positive moment in the markets in general right now. I think there's a lot of fear out there from a lot of people. We've seen it in the markets. We've seen a lot of fear in the markets, in the stock market, in the real estate market recently, okay? Over the past year, we've seen this continuously. So as far as we're at peak bullishness right now, in my opinion, I don't see peak bullishness going on when I actually, talk to people out there and just kind of get a perception, okay? The firm exited its position for Wynn Resorts and financial giant BlackRock. Wynn Resorts, another one, okay? You sell out of Wynn Resorts over the past few months. Not necessarily a bad move because Wynn could be going lower, okay? There's a couple reasons. One is they're going to have a lot of costs with the Boston property as they ramp that property. And then also with Wynn Resorts, China could be getting weaker. So when I look at Wynn Resorts, it starts to get attractive to me around under $100, but I'm probably not even buying Wynn Resorts right now. But here's my issue with Wynn Resorts. Why did he not sell out when it was near $200 when I was selling out? That was the perfect time, right around the Steve Wynn scandal. That whole news came out. That was the perfect time to get out of Wynn Resorts at a massively higher price than where it is at now. At that time, it was anywhere between $180 and $200. That was the perfect time, any time around there to get out of Wynn Resorts. Why would you get out of Wynn Resorts now when it's around, $100 or $120? He probably sold most of his shares between $100 and $120, which once again might be good because it's going to probably go lower, but at the same time, when I look at this, I'm like, why not sell? Well, you should have been out of this position 6 to 9 months ago, in my personal opinion, okay, when I look at Wynn Resorts, all right? Loeb has also disclosed a new stake in American Express on Friday, blamed his pessimistic market outlook on expectations for a slowdown in U.S. economic activity over the next 12 months, so he's basically bearish on the overall U.S. economy. I'm not going to argue with that. Anything can happen in the short term. I'll never argue against somebody that says we're going to have a bad next 12 months in the overall U.S. economy or something like that. Like, whatever, anything can happen. Who knows? It could also be a very strong economy over the next 12 months. Like, I hear a lot of people making a lot of predictions all the time, short term on economy, and most of the time, guess what? They're wrong, okay? Over the last 8 or 9 years, I've heard person after person say, oh, I'm worried the U.S. market's at peak right now. Oh, our market's going to go down. Oh, the U.S. economy is going to go down. I've heard this time and time again for 8 or 9 years since we came out of the Great Recession. And I'm still waiting on it. Eventually, somebody's going to be right, and it will happen. But all this worry, it's like, okay, unless you have something concrete you can show me, unless you have something concrete in the numbers you can show me, what is this? Maybe things could get weak over the next 12 months. Okay, current above trend growth will slow over the next year. He says growth outside of the U.S. is tepid, driven by China tightening, still percolating through the system as the markets wait for the country's reset stimulus to take effect. I kind of agree with him as far as China. China is a big wild card right now. China could have a very weak next year. We'll see if a trade deal gets done. If a trade deal gets done that can keep both sides happy, the U.S. and China, maybe that could be a big recovery for China. But if no trade deal comes, I see a pretty weak, fairly Chinese market over the next year or two. In my personal opinion, if no trade deal gets done, I highly doubt the Chinese market is going to be super strong if no trade deal gets done over the next few months. That's my personal opinion. So we might at least agree on China overall. And obviously, I've never been the biggest Netflix fan in the world, so we might agree on that as well. Okay, Campbell Soup. So this gentleman has bought a massive stake over the past year in Campbell Soup. All right. And lastly, we'll just end out here. He manages around $18 billion. Okay, manages $18 billion of other people's money. Wow, what a great thing to do, right? The firm is up 0.6% this year versus the S&P 500, up well over 10%. So as Warren Buffett says, hedge funds don't even usually do as good as the S&P 500. This is more proof in the pudding. And my issue with this is, anybody can have a bad year. I don't care if you're Warren Buffett. I don't care who you are. You're the greatest investor ever. Every single person can have a bad year here and there. My issue with him is he's so underperformed the market, and he's been in these positions for a long time. So it's not like he's just started buying some stakes in some new companies or something like that, and they gone down the short term. Like a lot of these stakes in companies he's had for years and years, and he's still had an absolutely horrible year. And he's got $18 billion under management. This isn't like there's some average Joe in his basement or something. This gentleman's got $18 billion worth of other people's money, and to be severely underperforming the market, and to obviously be a follower in Netflix and Facebook are stocks that you should have been out of a long time ago if you want to get out of those stocks. If anything, you want to start buying those stocks now when they're down here at these levels. He's just kind of following the market. The market crashes the stock. He goes ahead and sells off it and be like, oh, I want out of that now. And watch Facebook end up coming back over the next few years. And all of a sudden it's a $200-300 stock again. And he'll probably buy it back then. And this is my issue, okay? People sometimes, say things like, oh, smart money is selling out of stocks, or smart money is selling out of this particular stock or whatnot, because they see someone that has a net worth in the hundreds of millions, or they got a few $billion or whatever, or they manage a lot of money, and they call that smart money. Like, these guys are so smart. A hedge fund manager is so smart. Tell me, if hedge fund managers are so smart, why do they consistently underperform just basically what the market goes up? If these guys are so smart, there's one thing they're really smart at, and I'll give them all the credit in the world for this. They're really smart at getting other super rich people to manage, give them their money so they can manage it. That's at the end of the day, guys. When I look at a lot of these hedge fund managers, all they play is follower. Whatever the hot stock is, they try to buy that stock and ride it, and a lot of times they end up getting burnt on it. Then when a stock crashes down, then they sell near 52-week lows, and it's like, okay, wait, shouldn't you be buying the stock? They're almost playing the game of buy high and sell low and something like that, and that's another big reason why these hedge funds can have horrible years, year after year, but yet they manage tons of people's money out there. And it's like, you know, if people want to give their money, their $1 million they have, or their $10 million in assets they have, to a hedge fund manager to manage their money so it doesn't even do as good as S&P 500, I'm just like, why do people make these decisions like that? Like, man, these hedge funds must be really good at selling people. When I look at Facebook, I'm looking at the stock. This guy just exited this position, right? Facebook, this company has revenues exploding, profits exploding at 52-week low right now, has a forward P of 17 despite, you know, what they should have massive growth going forward for many years into the future. And this guy sells out of it here. It's like, really, you sell out now? Why were you not selling out a while back when it was 200? Netflix, why not sell out? We know about the competition coming in Netflix space. We've known about this for over a year. I've been talking about it on the channel. Why was he not selling out when it was $400+? Why do you start selling out when it's around $300? Like, that's a massive difference in money there, right? And then you buy a stock like Campbell Soup. Campbell Soup, that might have been a great stock to buy back in the 1950s. It's about to be 2019, okay? And Campbell Soup is not really the type of stock I would want to own that has much of a great future in front of it, okay? So when I look at this, I'm just like, this is like a comedy show to me, and these hedge fund managers get away with it, and the fact that other people or investors consider them smart money is baffling to me. You cannot tell me these hedge fund managers are smart money, okay? If they were smart money, they would at least be able to keep up with the markets year after year or beat the markets. They're not smart money, guys. A lot of these guys are just clowns, and they're just following whatever the market trend is, and if everybody's selling off stocks or a particular stock, they do it as well, so they can just kind of like push that away and like, oh, I wasn't a piece of that. And if a stock's flying high, they buy it near 52-week highs to try to ride that and say, oh yeah, by the way, you see that stock at its 52-week high? Yeah, we own that. Microsoft, buying more and more Microsoft near its 52-week high, right? That's another position. So you'd be like, oh yeah, Microsoft, by the way, yeah, that's a big position for us. Yeah, Microsoft, you see how good that was doing over the past year? Yeah, we own Microsoft. We're so smart. It's like, dude, oh my gosh. Anyways, guys, I hope you enjoyed this. Thank you for watching and have a great day.